This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Another record day on Wall Street, the Dow hitting a new high, the S&P just shy of a new one.
Consumer protection, what Penney shoppers really think of the struggling retailer and what the new CEO must do to win over more of them.
And Sir Richard Branson, the outspoken CEO of Virgin Group, talks to us about everything from cheap tickets to the global economy.
All that and more coming up on Nightly Business Report for Tuesday, April 9.
Good evening, everyone. Well, Tyler, more milestones on Wall Street, and not just for the averages, but for some individual stocks as well.
Lots of individual companies piercing through all-time highs. Well, the weather warmed up on Wall Street today, and so did stocks. Records aplenty. Let's start with some of those big-name companies that Susie was referring to. All Dow members, each touching all-time highs today. Here they are. Disney, Home Depot, Travelers, United Technologies, and Walmart. Those are only the Dow stocks at all-time highs. Now, those gains did help power the Dow to a new all-time closing high of 14,673. The S&P nipped above its all-time closing high today, too, but it faded late and finished 2 points shy of a record close at 1568. The Nasdaq was up 15. Stocks got a boost from materials companies on rising demand for commodities like copper and oil. Throw in some fresh optimism about corporate earnings after Alcoa's report yesterday. Then add a dash of some Fed speak, indicating the central bank isn't likely to tighten anytime soon, and you've got a recipe for another day of stock market records.
And our next guest tonight doesn't see obstacles for stocks to go even higher. Jim Paulson is Chief Investment Strategist at Wells Capital Management. You know, Jim, what amazes me is no matter how much bad news we get, whether it's a terrible jobs report, threats from North Korea, the European financial crisis, stocks just keep going up. I mean, what's driving this rally and what could derail it?
Well, I think a few things, Susie. I think one thing is we are desensitizing a little bit, the investment culture at least, to the idea of the Armageddon story, the end of world story. We've kind of been through that so much in the last few years. We're sort of desensitizing and reacting less to it when we hear potential negative things. I think that's a healthy development. It kind of is one of the things you need to do to sustain a recovery. But I think the big catalyst this year has been that the growth in the first quarter in the United States has come on far better than expected. Notwithstanding last Friday's bad employment report, growth in the first quarter is probably going to be north of 3% for real GDP, when coming into the year, most expected only about 2% growth. And as growth reports come in better than expected, that people have to revise up their forecast, and that optimism goes right through stock prices.
You know, Jim, the Dow is already up about, 12% so far this year. Where do you think it can end in percentage terms?
Well, I've been on record, Tyler, since year-end thinking that the S&P 500 could touch 1,700 this year. I'm not necessarily suggesting that's a year-end target. I kind of suspect we might go up there and come back down a little bit from that by year-end. But if it does reach 1,700, then that might be, maybe another 8% upside yet this year that the market could squeak out. And that will come about if we continue to get an economy that comes in better than expected.
Let's talk a little bit about earnings. Last night we heard from the CEO of Alcoa, very upbeat about the global economy. What do you think we're going to hear from other CEOs over the next couple of weeks, and how is that going to play into the stock market?
Well, I think the reports themselves, Susie, that they report for the first quarter, I think by and large are going to be good and probably outpace expectations. When I find when GDP does better than expected, then profits do better than expected as well. But I also suspect that most CEOs are going to have some cautionary comments about the second quarter and the rest of the year, particularly focusing in on an increasing impact from sequester and other fiscal tightening forces on their marketplace. So I think it's going to be kind of a mixed bag for the market as far good reports of the first quarter, but still caution about the future. And that could create some volatility, at least in the stock market here.
You know, Jim, I've been noting that money is flowing back into equity mutual funds. That's often a sign that individual investors are getting in, and unfortunately, history tells us that they often get in late. If I want to believe what you're telling me, I'd put more money in. But let's say I want to play a little bit defensively right now. What would be some defensive choices to protect my profits, but maybe leave room for more?
Yeah. I think that a lot of that has to do with the mix that you'd say. Maybe rather than going from bonds to stocks, you might want to look at reducing some of your high exposure to high quality bonds and moving a little to lower quality bonds rather than making the leap to all the way to stocks. If you go into the stock market, you can certainly have a bigger allocation, Tyler, towards those with a little less price beta or a little less price volatility, and those that offer higher dividend yields. That higher dividend flow tends to reduce their volatility, particularly in down markets.
All right, we'll leave it there. Thank you so much, Jim. Jim Paulson of Wells Capital Management.
Our other top story tonight, the shakeup at J.C. Penney, one day after the struggling retailer sacked its CEO, replacing him with his predecessor. The stock nosedived. JCP tumbled 12% to its lowest close in a dozen years. Courtney Reagan went to Penney's today to see what customers think and what the new CEO needs to do to attract more of them.
Over the past 14 months, 111-year-old department store JCPenney has been undergoing a massive transformation, changing its pricing strategy more than once, changing its merchandise, its marketing, and even the store layouts.
Since they started that new price change, I was a little apprehensive, but I find that now they're marking down and it's kind of like a stabilized price. So that's pretty good instead of having it marked off and, you know, saving $20, you're always saving.
On Monday, the visionary behind this transformation, CEO Ron Johnson, stepped down from his position. Johnson's predecessor, Mike Ullman, becomes his successor, stepping back into the top spot as interim CEO. And the CEO shuffle hasn't been good for investors. JCPenney's stock is trading at a 12-year low. But the shoppers in Elmhurst, New York seemed unconcerned. Those that have noticed the changes in store had positive reviews, noting in particular the change in prices, selection, and quality.
The constant low price would be a more attractive thing. If there's a huge sale, like you said, it gets real hectic, and then it kind of turned me away.
They have different kinds of bags, makeup, jewelry, everything. So, I don't have to go to different stores. I could just stop at one place and it's all there.
The big question now becomes whether or not JCPenney can bring back the shoppers that it has lost. For Nightly Business Report, Courtney Reagan, Elmhurst, New York.
More now on JCPenney with Margaret Bogenreef. She's a principal at ACM Partners. She thinks ousted CEO Ron Johnson had the right strategy, but just at the wrong company. Margaret, welcome. What do you mean by that?
I mean, I think actually Johnson was onto something when he was doing this. Within the department store industry, I mean, you're seeing significant shrink in terms of customer loyalty, customers who return to brick and mortars, and really customers that are driving to specific department stores. I think the store within a store concept that he was trying to innovate at JCPenney was actually where this industry is going. And I wouldn't be surprised if you see Nordstrom's, Neiman Marcus, maybe even Macy's push this strategy within the next 16 to 18 months.
Bloomingdale's already doing it with some success, I note. So do you think that the new CEO, Mr. Ullman, who was there before, ought to walk away from what Johnson was trying with the store within a store? They're not inexpensive to do.
Right. Well, I think what Johnson was trying to do was he was trying to overly innovate 10% of the store and ignored the 90% that was left behind. That was really JCPenney's core base. If I was walking into this situation as a CEO, obviously you have to integrate part of Johnson's plan. I mean, JCPenney's bled more than $2 billion over the last 3 years. So obviously there's been a lot of money put into this. And obviously consumers are reacting, like you heard in that package, to specific parts of the plan. You do, however, have to revisit who your traditional customer base was and try and bring them back in.
Is there a place, Margaret, today for Penney in a world with Walmart and Target and Kohl's and Nordstrom and a whole host of others? And is Mr. Ullman the right man for the job at this moment?
Absolutely. So let's look at a few things. I think one key thing that's being lost in all this concern about Johnson's leaving and Ullman coming back in, JCPenney's is still a multi-billion-dollar retailer. I mean, we aren't talking about a two-location boutique. So there is obviously a place in this retail environment for JCPenney. I think it's a different place, and I think, like, because I work in turnaround, I like to think about things being relative versus absolute. Is JCPenney going to be what it was 50, 60 years ago to the American consumer? No, but there is a specific type of consumer that will go to JCPenney, and more specifically, I do think millennials will start to shop there more. I just don't think they were going to do it during Johnson's tenure.
It did lose more than $500 million, I believe, last year, and it's going through a lot of cash. If there's one thing, Margaret, that you think Ullman should do immediately, what would it be?
Well, first of all, I would actually let the media have their fun with Johnson for the next few weeks. I mean, Ullman really does have to reset the culture and the strategy at JCPenney. I think I would put a stop to 90% of what's going on right now, this plan. You have to work with your suppliers and your vendors. You need to tighten up cash management, like you said, $600 million spent in the last 12 months. And you really need to stabilize everything. I know that's the word everybody's using, but you really have to figure out what you're spending money on and what you don't have to spend money on.
Margaret Bogan-Reeve, principal at ACM Partners, thanks very much.
Thank you.
And coming up, our cheap fares, the secret to Virgin America's success. Sir Richard Branson outlines his strategy to take on the competition. But first, here's a look at how the international markets closed today.
Shares of First Solar soar, and that's where we begin our market focus tonight. The maker of solar panels forecasting 2013 earnings and revenue well above Wall Street estimates. This as the company expands its power plant development business. The stock was halted for much of the day, and when it opened, it rocketed higher and closed up 45% on more than 12 times the usual volume.
Tech stocks in the spotlight today. Microsoft and Intel leading the Dow blue chips. Both stocks have been underperformers. No surprise, given that they're linked to PCs in a world moving to tablets. But both stocks jumping more than 3% today. Intel closing at $21.75. Microsoft at $30 a share. Both companies report earnings next week.
The S&P materials sector, the best performer today as China reported slowing inflation. Investors see this as potentially bullish for commodities as credit restrictions in China might now be allowed to ease, and that could translate into higher demand. The index was up more than 1%, the materials were, and components Cliff Natural almost 9% higher, Freeport-McMoran 4% up, and Allegheny Tech up almost 3%.
Trades in Herbalife and Skechers were halted for much of the day. The connection here, they both use the same accounting firm, KPMG, and that giant firm was forced to resign from both companies because of an insider trading scandal involving a senior partner who allegedly sold private information on both companies. Herbalife shares tumbled 3.5% to $37, but Skechers rose 2.5% to $22.
And Susie, Republic Airways Group is in talks with two investment firms to spin off its subsidiary Frontier Airlines. This according to Dow Jones. Republic bought Frontier in bankruptcy in 2009 and has been trying for a year or more to find a buyer for it. Frontier services the West from a Denver hub. Republic shares were higher today, and you can see the spike in the chart there when Dow Jones ran its report.
In other airline news today, a new flight pattern for Virgin America. The upstart airline is now offering flights from Newark to San Francisco and Los Angeles. It'll compete with United Airlines that dominates the Newark hub. Now, typically, a round-trip ticket to the West Coast runs around $1,000, but fares at Virgin America are as low as $360. When I talked with Virgin Group CEO Richard Branson, I asked him if he can make money on those cheap tickets.
We can make money. I mean, Virgin America attracts people. They love flying us. We're the best airline in America, as voted yesterday. If we can fill our planes, we can make money.
So, Sir Richard, are these cheap tickets just for now as a special launch, or is this going to be the way of business from here on?
We like to offer great value for money for the consumer, but we also like to offer tremendous quality. So, you know, for instance, anybody traveling with us, in every single seat, they get Wi-Fi. They get a fantastic entertainment system. They get leather seats in economy class. They, they get from delightful cabin crew, brand new planes, and so on. So I think Virgin wants to offer the best quality service, but also the best value fares.
Look, there's no question that people really do enjoy traveling on Virgin. It is a high quality experience, but Virgin America has been losing money over the past couple of years. Can you get enough people on your planes so that you can start making money?
Yes, I mean, the last quarter was very profitable. Next year will be very profitable, despite United Airlines dumping capacity on us, both back in San Francisco and coincidentally just managing to suddenly double the amount of frequencies out of Newark on top of our flights. So, blatantly anti-competitive behavior. But because people like to fly Virgin, we will be very profitable this year.
Well, I mean, that is exactly the case. You are now in markets where you're competing with United, American, Delta. These are big guys that provide service to a lot of different cities. How do you successfully compete against them?
We compete by being much better than them. I mean, United were voted the worst airline in America yesterday. We were voted the best. If you're the best, people seek out the best. And we've been competing with these carriers in every single market since we started a few years ago. One thing I would say, though, the competition authorities, having allowed the 6 big carriers to become 3 dominant carriers, they have got to watch anti-competitive practices by the big carriers. I mean, you need small carriers to survive and thrive. And if the big carriers act anti-competitively, the Department of Transport and the competition authorities should do something about it.
Most businesses don't like regulation. It sounds like you want more regulation.
No, we want competition authorities to act as competition authorities should do. So if every time we set up a new route, suddenly our rivals can suddenly find double the capacity to put on our route, that needs to be looked at, I think, by the Department of Transport.
Let me ask you about the global economy. A lot of people are getting worried that the economy is in trouble. You operate businesses all around the world, not just airlines, but also in music and mobile phones, financial services. From the way you look at things, how's the global economy doing? Are you worried?
There's been a slowdown. I really do think that the corner is turning, and I think business people must help governments turn that corner, and we must be positive.
I'm curious about the Virgin space program, and I know you've been running some tests recently. How much longer before you have takeoff?
It's very exciting. This is going to be the year for Virgin Galactic. Within a handful of months, we'll be into space, so very, very exciting.
Those tickets won't be cheap, will they?
Not initially.
How much?
Initially, it's a couple of $100,000, but if you're willing to wait a few years, I think the pioneers that are being good enough to help fund this by booking their space into space will enable us to bring the price down for people, in 5-10 years' time.
And still ahead, the investment that's returned more than 200% over the past decade. The answer may surprise you. But first, a look at how commodities, treasuries, and currencies fared today. Our Tax Tip series continues tonight with a look at important ways to save for retirement. According to a new survey, 82% of workers participate in some sort of employer-sponsored retirement plan if one's available to them. But many may not realize that they now have two types of 401k plans to choose from, a regular and a Roth. Sharon Epperson joins us now to explain the ins and outs of these plans. So what is the difference between a Roth and a regular 401k?
We know, Tyler, a lot of folks don't get this, and it's an important fact that a lot of financial planners say they're overlooking if they have this option. The way it works is a Roth 401k works a lot like a Roth IRA. It allows you to place after-tax dollars into your contributions, and then you're able to take that money out tax-free. The difference, though, between a Roth 401k and a Roth IRA is that there is no income restriction. That's the difference, is that you are able to put in this after-tax money and then take it out tax-free. And that's why a lot of people are very attracted to it, particularly younger workers and people who who actually make too much money to contribute to a Roth IRA.
Is this something that you can get no matter where you work? Are most employers offering this?
Well, many employers are starting to offer. We have seen the popularity on the rise. We're looking at about 37% of workplace retirement plans that now offer the Roth 401k option, and that's according to Fidelity. Fidelity, of course, is the largest retirement provider, the 401k provider in the country. And we're also looking at the fact that in 2009, just 4 years ago, there were only 22%, so it's certainly increasing.
So there are some new rules also governing Roths. Not only are they new in many plans, there are new rules that apply to them. What are they?
Well, that's why it might be more attractive for some employees and some employers to have this. What has happened with the American Taxpayer Relief Act, with that fiscal cliff deal, is new legislation that now says that you don't have to necessarily take distributions from a 401k to be able to convert it to a Roth 401k. You can now, without having taken distributions, you can now convert that money. So that means you don't have to necessarily be 59 and a half, you don't have to be disabled, and you don't have to have left the company in order to do this conversion. So right now, Fidelity says about 12% of those companies that have the Roth 401k option are allowing you to convert.
Should you do it? I mean, should people just do it? Is
so
that
that's the big question. That's often the big question with converting to a Roth IRA as well. There are three factors that you really need to look at. The first one is, really, do you need the money right away? And then how much are you going to have to pay in taxes to do the conversion, and where's that money going to come from? You don't want to take it out of your retirement assets. And the final thing you need to look at is where your tax bracket is going to be in the future. And if it's going to be higher, this is something that you want to consider. But if it's going to be lower, or if you need the money right away, or if you have to dip into that retirement principal to pay the taxes, probably not a good idea.
How much can I put in, and if I'm 50 and above, how much more can I put in?
You can put in $17,500 or $23,000 if you're 50 or older, and that is per taxpayer. That's not per plan. So if you decide that you want to mix it up and have different tax strategies, have a regular 401k and a Roth 401k, which is a great idea for many people, remember that combined you can only have that $17,500 or $23,000 if you're 50 or older.
Calling HR tomorrow. Sharon Epperson, thank you very much. Our Tax Tip series is going to continue tomorrow with a look at women in retirement, how they're finding new ways to save despite earning less, living longer, and facing higher health care expenses.
And finally tonight, if you ever had a stamp collection growing up, you know the satisfaction of gathering and studying old and new postal stamps from all over the world. But you may never have imagined cashing in on those rare stamps for millions of dollars, like one well-known investor did today, or giving all the proceeds to charity. Robert Frank has more on today's auction and who's behind it.
Bill Gross is best known as the Bond King, but the billionaire bond trader and founder of PIMCO is also America's Stamp King. And today, he had a huge trading day in stamps.
Sold in $650 to bidder 654.
Bill Gross sold more than 300 lots from his collection today at an auction for charity. That is a tiny slice of his collection, which is far and away the largest and most valuable collection in the U.S. Today's sale raised more than $2 million, with some lots selling for more than twice the original estimate. A few lots sold for more than $60,000 each.
His sale certainly attracted a lot of attention because a lot of this material hasn't been on the market in literally decades, and it also helps that Mr. Gross is giving the proceeds to charity.
Stamps may not be as flashy as cars or art, but as a collectible, they have been great investments, stamps returning more than 200% over 10 years. Better than art, wine, and even stocks. But it takes expertise to buy the right stamps at the right price.
Quality and rarity are the two things that you want, and when you get both together, they're not inexpensive, but that's what somebody wants 10 years from now, 20 years from now.
Provenance also plays a role. Since Bill Gross is considered one of the smartest collectors, his sales tend to generate big prices. Many of the stamps that Bill Gross is selling today were the first stamps ever issued by the U.S. Postal Service. These are the 5-cent Franklin stamps and the 10-cent Washington stamps. There is one stamp that was postmarked from Canada, a 10-cent Washington stamp that could fetch more than $30,000. That's just for one stamp. Bill and Sue Gross will donate all of the proceeds from this sale to Doctors Without Borders and Millennial Villages. That would make Bill Gross the nation's top philatelist philanthropist. For Nightly Business Report, Robert Frank, New York.
Well, they are beautiful to look at. His mother got him started in all of this, the stamp collecting. None of her stamps were really worth that much.
right?
But I feel so guilty, Tyler, because my son was collecting stamps, and I tossed him out with the baseball cards at one point.
I guess it proves Bill Gross, a guy who has an eye for value. It translates from bonds, where he's been so successful, to having an eye for value in
He's a gifted
stocks.
investor.
Yeah, terrific investor, and a good guy to boot.
Well, that's Nightly Business Report for tonight. Thanks so much for watching. I'm Susie Garrow.
And I'm Tyler Matheson. Thanks for joining us. Have a great evening, and we'll hope to see you right back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
Garrett with a Nightly Business Report news brief. Another day of records on Wall Street. The Dow rose 60 points to a new high of 14,673. The Nasdaq up 15, and the S&P added 5 points. Shares of big blue chips like Disney, Home Depot, Travelers, United Technologies, and Walmart each closed at their own record highs. A different story for J.C. Penney. One day after the retailer fired its CEO, replacing him with his predecessor, shares tumbled 12% to a 13-year low. KPMG, one of the world's largest accounting firms, fired a senior partner after he gave inside information about two client companies, Skechers and Herbalife, to a trader friend. And the Ford Focus was the world's top-selling car last year, with more than 1 million units sold, a quarter of them in China. Be sure to tune into Nightly Business Report right here on your public television station.